I remember when I bought my first home at 29, and I was a loan officer at the time. And if it had not been for an African American realtor with me in that process, Jeff, I would have bailed on that deal several times.
Really?
But he kept me at bay. He was like, dude, we got this. It's going to be okay. And I almost walked from that deal over. It was just silly stuff.
Welcome back to another spotlight. And this one is not of the loan officer variety. This one is of the vice president variety. The VP of Community Lending, relatively new to the company, is John Drumgoole. And John, you are doing some incredible things, not only within the company, but within the industry. And I look forward to discussing that with you today. But before we get into what that even means, VP of Community Lending, I really want to learn more about you and who you are and kind of what led you to where you are in the industry and the business today. And then let's get into how you are literally going to be reshaping and shifting the state of the industry as it relates to lending.
Yeah, thank you, Jeff, and appreciate you having me. Hello, audience out there. My name is John Drumgoole, VP Community Lending here at USA Mortgage. I was pleasure to fly in and meet Ron, Linda, the executive team for dinner. Things went very well, and one thing led to another. I was introduced by a colleague, Jim Brumwell, to the head of the house, and we really hit things off, and things worked well. My background. I was born actually in Charlotte, North Carolina, to believe it or not. So I'm a Tar Heel by nature. I did my undergrad studies at NC State University. So I'm matriculated to various different areas of my career through education. We'll talk about that, I guess, in a minute there. But I guess two pivotal moments, Jeff, that kind of define where I am as far as being in this whole lending space happened very early in my career because we always say that nobody in our industry ever really plans to be in the mortgage space. We just kind
Hmm.
of by happenstance. So two pivotal moments in my career actually happened when I was kind of moonlighting, kind of halfway in, halfway out of the mortgage industry. I was actually executive producing R&B and hip hop. Believe it or
Really?
not, absolutely. So that happened, and I actually had three opportunities that I thought, Jeff, were going to be like my big break into the world of entertainment. Several of my songs had already been getting local radio play that I executive produced. And I was always one that was a very good collaborator. So I put together like a master demo tape that had all of my colleagues that I was collaborating with at the time. Those were R&B singers, hip hop artists, things of that nature. And, I used to hang out at a local lounge in the area, and I got heads up that one of the teams from a new record label that would be launching, one of the people involved in that is very, very famous, on various avenues. Shark Tank, I'll go ahead and name it. So you probably know who that person is. Well, he had a record label back in the day, and I got heads up that they were going to be touring our local city. And the owner of the lounge was like, if you get there early, we can kind of get you in line and kind of get you maybe to meet them, and you can pass on your master demo to them. And that did happen, but they decided to go with another group that was, a little bit popular further in the South. So that fell through. The second opportunity, I had a colleague of mine who had, relationship with one of the executive producers of a major multi-platinum R&B group. And every July 4th, they would throw this big July 4th cookout. And he says, we got plans. We're going to go down there. I'll be able to introduce you to them directly. And you'll be able to, set things off from there. He got sick that weekend. So that bottomed out. So that was number two. And then third, I had a very good friend whose family member was very high up in the music industry. As a mom, they won multiple Grammy Awards and things of that nature. And, they introduced me to some people who were connected to a subsidiary label of Arista Records. And they were based out of DC. And just before that took off, the relationship just kind of bottomed out. And then shortly thereafter, I began my career into the mortgage industry. I was grandfathered in my 20s. So I would say that to say maybe it was not an accident, given everything that's happening in the world of entertainment right now, that happened. But I had, No black eye there at all. But I had three opportunities that I thought for sure, with the
Yeah.
way things were going on the local scene, that I was going to be able to enter that space. But for whatever said, I began my career in the mortgage industry, and that during that time period, Jeff, I went through a period of personal transformation, physically, spiritually, financially, over a course of a few years. So, and then I took off. I met our buddy Dale Vermillion during that time period. We just had him at our local sales conference. He actually trained me that very first month that I joined, and was grandfathered in. And I took off in that first year, being very green as a loan officer. I was ranked number 8 in my office, which our whole office, we had 3 people that ranked in the top 10. And I won President's Club my first year as a very green loan officer. So that is kind of the first,
Wow.
pivotal moment of my career that, the music thing just kind of fell to the wayside. Ended up closing loans, 5 years of success, launched a broker shop with some of my buddies. Then the financial meltdown happened, forced to exit. So I just totally got out of the business altogether.
So what year did that happen? What years are we talking here?
Okay, so I was grandfathered into the industry in 2002.
Okay.
2002. So after that, I worked very successfully for years before I moved over and joined that broker shop opportunity where we launched our own broker. It was very fascinating. Being a young entrepreneur at that period of my career was very, very fascinating. I thought the sky was the limit. I've heard stories about people that started with 5 or 6 people in their broker shop, and now they have companies that have 400, 500,000 people. So I really, really thought we were headed. Then the bottom fell out with financial meltdown. So I took my career, relocated it to Atlanta. At that time, I began studying and preparing to actually go to law school. And that's pivotal moment number 2 in my career. So every night I was working during the day in business development, in the commercial real estate space, networking with high-end commercial real estate brokers throughout Atlanta. That's where I really honed my networking skills.
Hmm.
Going to those high-end commercial real estate networking events because they really moved the needle in that market. So, during the day I would work, during the night I would come home, diagram logic games all night long till I got very efficient and proficient, mastering that LSAT, skill set, which is very difficult. If you've ever taken that test, it's one of the most difficult standardized tests that you can take out there. Besides the GRE and stuff like that, the LSAT is just brutal. So after I got very efficient with that, I finally started scoring to the point where I think I felt comfortable. And I actually got accepted in about 5 law schools. 2 were in Chicago. And I was actually headed to Chicago to go to law school. And I got the opportunity from a buddy of mine, mention his name again. I was going to go to work during the day, go to law school at night. And I reached out to Dale Vermillion again,
Hmm.
and asked, I was like, are any companies in the Chicagoland area, that I can maybe work at and, go to law school at night? And he recommended me to one of our competitors, Guaranteed Rate.
Wow.
So I sent in my resume to someone. They had me teed up, and for whatever reason, my resume ended up in the hands of the guy who was leading the strategic growth division. And he told me, he was just like, you know what? You don't have to do anything. You don't have to come up here if you don't want to. We're ready to launch G-Rate in the Southeast. And if you want to, you can stay right there. I know you got plans that you have, but, we're ready to launch that. And if you want it, the opportunity is yours. So I had a decision I had to make. I was like, here I am. I spent a year and a half paying for all these prep courses for law school. Now here I am faced with an opportunity, and it was an entrepreneurial opportunity within an existing company. So I tell people all the time, don't be afraid to be an entrepreneur, within an organization, bring your innovative and all your skill set, and you can build something out. That's the opportunity. So I put my law school plans on hold,
Wow.
and chose to join this new thing with G-Rate. The young man who actually leads NAMBA now was brought in to lead the region. So I partnered with him. We developed a team and we grew like a 4-state region in 8 months.
Wow.
And that's how I transitioned back into the mortgage industry. And I actually decided to continue on the MBA route instead of the law school route. So those are the 2 pivotal moments of
Wow.
my career. One being the entertainment thing, which I put that on pause. I use a lot of that creativity today, which probably helped me when I wrote my first book. And the putting my law school plans on hold and rejoining the mortgage industry after a 5-year hiatus.
Wow. That's wild, man. I had no idea you had all that going on. And now
Yeah.
I want to digress for a second to back to the when you were in the entertainment industry. First of
Mhm.
all, is the person that you were talking about is his initials DJ?
It is. And as
Okay.
a matter of fact, I'll just go ahead and say his name because I think the cat's out of the bag. I rarely like
Damon
to name
John.
drop.
Yep.
But Damon John, he had a group and it was the FUBU group, and they were just launching a new record label. And it's so funny that you mentioned that because I actually, full circle moment, met Damon John. He was invited to one of our leadership conferences a few years ago, and actually in 2022. And I got a chance to physically meet him again. He probably don't remember me for, that many years ago. But when I
Sure.
met him, I took a picture with him. He spoke of that leadership conference, and I actually mentioned that time period, and he smiled because he did remember them launching that label. So it's very cool that I met him on the mortgage side again. So that's when I knew that I probably landed in the right spot. Maybe the entertainment world was really maybe
Yeah.
not for me, even though we did have some good stuff out there. But yeah, so look where he is today. And for him to speak at that conference and to have things align like that was a big moment for us. I still have to get my hands on that picture too. I don't know where that picture disappeared. But
That's
yeah,
cool.
you hit it right
That's
on the head.
cool.
Yeah.
One more question about that one, just because
Yeah.
purely curiosity. What's maybe the biggest artist you ever rubbed shoulders with?
Um, that's a good question because I'm not really a fanboy, if I could
Sure.
um,
Yeah.
say that. But I remember hanging out with some of my homeboys and being in a lot of lounges. We were just those kind of party guys at that time period. Nothing really crazy.
Yeah.
But I remember a night we were hanging out in Atlanta, Georgia, and the whole place was just packed with a lot of star-studded celebrities, people like the Ludacrises of the world, big DJs of the world. And I don't know why they just convened at that particular time period, but we were just there. The jagged edges of the world, they were just there. And it was just a night where no one was really performing. Everybody was just there having a good time and enjoying the atmosphere. And I've never been one to run up and, try to get an autograph or anything like that. I would
Yeah.
see them and we would just kind of fist bump and just keep it moving. But that's pretty much the extent of it.
That's
But
cool.
the opportunity probably has been there. But like I said, I really wasn't in that fan because I was trying to get in the industry too. So at
Yeah.
that
Be
point, I
one of
went
them.
from being
Yeah.
like a miniature fan to being like competition to a certain degree. But I really respect all of them. But that world has changed so much. I'm a 90s guy, so the new stuff that's out there, I get it. I know they had the big, thing that happened during the Super Bowl where everybody was trying to pick sides.
Yeah.
I
Yeah.
love the new artists that are out there, but I'm a 90s guy, so that's the genre that I really, am
That's cool,
tailored to
man.
still
That's
today.
cool.
Yeah.
You and I probably have similar musical interests then, because I come from the
Yeah,
same
yeah,
era.
yeah, yeah.
I love it. I love it. So you kind of had an interesting road now in the mortgage
Mhm,
industry, right? And
mhm.
and then you end up back in it. And so kind of walk us down that path of how you've now paved the path for what I sounds like what you're doing today.
Yeah, absolutely. So in 2017, Jeff, I published my first motivational novel. And it's something that when I started writing when I was actually in Atlanta, just digging out every night. I would stay up till 3 o'clock in the morning, just typing away, hacking away. And one of my friends said, you should just put it into a book, at this point. And, I was a very new writer. And I didn't really know all the avenues. I refused to like get a ghostwriter. I said, I'm just going to try to do it myself. So through trial and error, a lot of blood, sweat, and tears, I put together this novel. The first version of it was called Crimson Sweat. The last version is Beyond Sea Level, which is the same body of work. And I put it together, put it in a book contest. And I had moved to DC at that point by the time I put it in a book contest. And I was sitting in Chipotle one day for lunch. I'll never forget it. And I get an email alert on my iPhone, and I look up, and it said, Your book has placed as a silver medalist in this book contest. So
Wow.
they brought me up to New York, Harvard Club of NYC. I'll never forget it. And here I am networking in a room with people that graduated from Yale, Harvard, all these brainiacs. And here I am with two medals draped around me from my first published book that was dealing with overcoming generational barriers for affluence. It was centered around four African American families who all paved their way through various degrees. One was like a corporate guy, one was an athlete, one was a musician, and one was like a blue collar worker. and they all came together, merged this great friendship, and through their struggles, they found the light at the end of the tunnel, and it started dealing with, issues that we're dealing with now, a lot of macro issues of challenges and barriers to building wealth for those families. So, with that being said, that was kind of a catalyst for me saying, "Wow, I think I found my lane here," as far as passion and giving back. So, 4 years ago, I was working for a company based out of the Hampton Roads area, and I get a call that I was being recruited from a top tier organization that wanted to kind of utilize my skill set in the minority lending growth space. And I was such a fan of the company I was at. The culture was beautiful. I loved the people. It was one of the biggest difficult decisions that I've ever faced in my career. And I'll never forget the young man who was recruiting me. I think he was sent by someone else who I won't name the name of the person I believe they sent after me. But he says, at your age, John, I was in that same position and I had to make a decision. He says, do I want to be here and look back 5, 10 years and still in that same place? Or do I want to make this decision and kind of move forward? And at that point, I was challenged like I had never been before on a recruiting call. I was like, who does this on a recruiting call? Challenge you like that, He challenged so many degrees of not only my manhood, my professional career, a whole lot of things. And he just did that on a rest. Like, who does that? And I got off the phone and I talked to one of my colleagues that's near and dear to me, and I consider him one of my advisors. I was like, I've never been challenged like that on a recruiting call. But a couple of weeks later, I gave him a yes and jumped on that train. And then after being with that company for a year and a half, I was promoted twice. And then the owner, founder of that company now pulled me in a closed door meeting and asked me, what did I want my legacy to be? And at that time, I was actually considering exiting that company. Now that cat is out of the bag, and they caught me right at that time and asked me what I wanted my legacy to be. And I just kind of told them things that I'm telling you now. And a few months later, open door came, and I was promoted again to lead the minority lending initiative for the company and partner, with some of my colleagues out there. And, that space is continuing to grow and expand. And it's nothing that I planned to do. I wasn't aiming for that. I just kind of had my head down and was just pursuing my passion that, I believe that everyone has an opportunity to access that gateway to wealth. Because, I grew up, from starts in a two-parent household. My dad was a provider and my mom didn't work. He liked it that way. And then they divorced. And at that time, my mom had 5 kids on her own. So my financial picture, our family's financial picture changed drastically. So I actually saw it from both elements. I saw it from a two-parent and how that is just thriving, bustling. I didn't want for anything, Christmas toys. I had loving grandparents to now single mother. Now you're doing something different, and
Yeah.
it was a challenge. So I've seen it on both scales. So that is why I think I have such a balanced approach to what I do because I've seen it on both scales. Mother and father both come from very good families, but when you isolate that and your mother has to raise 5 kids on her own and you have that situation, turns into a different beast and a whole different set of challenges. So I think those are the things that are innate in me that kind of push me to continue to want to serve the way I do.
Wow. Wow. Okay, so now fast forward
Mhm.
and here we are today. I mean, what does that look like from when, from relative conception,
Mhm.
and how has it kind of evolved and shifted to where we are today? And then, what does it look like today? Because I mean, we're sitting in arguably one of the most divisive times, that I can remember. I don't want to compare it to historical times, obviously, but we're sitting in a weird time right now, which has to somehow impact what you're doing. And I'm the first to admit that I'm relatively ignorant to it.
Yeah.
So I'd love to hear kind of, first of all, what did the progression, what did it look like at the beginning to what it looks like now? And then where are we going?
Yeah, that's a great question. And I would say one of the biggest misconceptions about the community lending, minority lending space, Jeff, is that it is a monolithic animal. And going back to how I just, characterize my growth, it is not. The Hispanic and the Black communities are more divergent, if I can use that word, than ever. Various shades. Before it may not have looked like that, but now it is totally not monolithic. So you cannot approach it the way that you could have maybe even 5 years ago, maybe even 10 years ago. You have your upper echelon in the Latin space. I have friends that, families came over or immigrants. They are absolutely killing it, super successful. Some of them are very wealthy. Then you have your middle of the road folks who are middle class, doing pretty good. And then you have your LMI folks who are looking to channel up. Same thing in the Black community. You have your people who are, extremely wealthy, entrepreneurs, success stories. We just mentioned one. Then you have your middle of the road folks. You have your folks who are, looking to break through and get in there. At our last event, we had a young lady who leads a foundation, I Am My Sister Foundation, who brings single mothers, and bring them along that journey so they can open that door. I mean, when you see these groups of people, and we just saw it, you just said it, it's very divisive out here in this whole atmosphere. And one thing that I could say that we learned from the last maybe electoral process is people are thinking totally different now, and you just can't box people in and thinking, hey, this group is going to think like this group is going to think like that. You really have to have a really wide spectrum when you're looking at it from this perspective. Me personally, I like some of the exciting trends out there that says 70% of all net new homeowners or more will be homeowners of color. We have to really look at this, Jeff, from a business case. It's not a philanthropic thing. It is a business case that says the next generation of buyers and consumers are going to be consumers of color that are going to make up what we see as our new customer. So when you're thinking of it from a top of the house standpoint, you think about it from a C-suite standpoint, how are we going to shape our underwriting guidelines, our policies, our lending, our boots on the ground, things of that nature. How are we going to shape this so we serve these people and kind of meet them exactly where they are? Because some of them are going to be traditional practices, yeah. Like I just said, you're going to get people that can put 10%, 15% down. I got a couple of friends of mine whose family gave them $100,000 to help them purchase a home. I got a friend of mine in Northern Virginia whose family gave her $35,000 to purchase a home. You're going to have that generational wealth rubbing over. And then you're going to have your people who can easily reach into their 401k and yank out 15 grand for that down payment. Hey, no problem. But then you have those people out there that may even have 680, 700 scores that say, wow, I'm still struggling for the down payment. How do I make this work? And we saw this when we looked at our FHA numbers, and we saw that people that had over 720 score, their utilization for the FHA product had increased by 15% over the last year. So, something's going on out there that we're going to really have to shape and mold this thing so that we meet the consumer where they are. And I don't think it's going to change. I don't think the prices of homes are going to change. I know markets like our headquarters, St. Louis, are in. It's kind of like a sweet spot. I mean, it's some really good deals out there for the Midwest in general, but I don't think that's going to stay the same, Jeff. I just really see that increasing as it converges nationwide, and we're really going to have to make some sharp, really innovative lending decisions going forward. So one of the things that really excites me, if I can use that word, about where lending is headed, it's the opportunity to collaborate with our industry partners. When I went to the recent NARAB conference, I just got really lucky. Southwest, you can choose your own seats, and I was able to get really lucky and sit directly across from one of the leaders of one of the major agencies, one of the GSEs, one of their representatives. So we were able to have a great conversation on the flight, from
Wow.
DC to South Florida, and just learning, some of the innovative things, some of the things they're seeing on their side of the house, and how it's going to shape, what we do, and it's going to cause for more collaboration, because if we can collectively move the needle in Black and Hispanic households to reach that 50% threshold, which I don't think we've ever cracked it for both entities, if I can use that terminology. I think the highest, the African American homeownership rate was 49.4. I think that was in 2004 under the Bush administration. So we've got a lot of work to do. It's dipped quite a bit since then, but if we can get both the Hispanic and Black homeownership rate over 50% and kind of continue that trajectory, just think of what it could do to the next generation. Because our friends at Urban Institute tell us that if a parent owns a home, the likelihood of their children owning a home goes up exponentially. So if we can begin that work today, tomorrow will look a whole lot brighter. And the ability for wealth to transfer from one to the next, and the ability for the next one generation to help the next generation increases greater. And it's not that struggle One thing I don't want is for the next generation to have to go through that same struggle that maybe you faced, or maybe I faced, or our generation faced. I think we need to just put an end to a lot of that trauma and that struggling, and we need to provide more of a springboard and a trampoline for these guys instead of having them go through the same cycles and struggles that we had to.
So, I mean, first of all, it sounds incredibly promising,
Mhm.
right? It sounds like
Mhm.
there's a lot of potential opportunity coming down the pike. Now, if I'm a loan officer and listening to this and thinking, okay, how can I take advantage of this? How can I use this, to be someone who helps drive progress,
Mhm.
but B, also help drive progress for my business, realizing that this is the future.
Mhm.
And you've got not only that, you've got another generation of humans that haven't bought homes like previous
Mhm.
generations, Gen Z, right? Because they're either priced out or just misinformation, et cetera. But as it relates to community lending, as it relates to diversity, as it relates to, as you mentioned,
Mhm.
Hispanics and African American, how does a loan officer position themselves to really cater to and support those communities, which will then effectively help their business?
I would say to start one thing, Jeff, we have to get younger and we have to get more diverse.
Yeah.
The average age of the loan officer is north of 50. So we're going to have to figure out a way strategically from a leadership perspective to get younger and to get more diverse. And that's going to take a lot of give up, if I can use that terminology. It's going to take leaders now giving up time, resources, and energy to train these younger generation of folks like myself who didn't plan on joining the industry and provide a flat platform, whether we have in-house universities for our companies or some specialized thing to have them enter the business. Because one thing that is kind of like a standoff is the commissioned only structure, and some of them, don't want to take the time to set aside 6 months reserve to deal with the ebbs and flows, the feast and famine of the business. And number two, the diversity aspect. We have to get people out there who mirror the communities that we serve, that look like the community and are, understand the nuances of that community. That's not saying that a person that doesn't look like the community can serve it, because we do know that that's not the case. Someone that looks like you or me can still have a good impact. And we have to do education in that aspect as well, to kind of let them know what the consumers are expecting. They have, be some trust issues there. There may be a lot of, anxiety issues, and there may be a fear factor. If we can help calm those fears and those anxieties from the gate, and then help them navigate the nuances of the lending space, I think that is a big part of it. I remember when I bought my first home at 29, and I was a loan officer at the time. And if it had not been for an African American realtor with me in that process, Jeff, I would have bailed on that deal several times.
Really?
But he kept me at bay. He was like, dude, we got this. It's going to be okay. And I almost walked from that deal over. It was just silly stuff that I was thinking about leaving that deal over. So I think just really doing a lot of hand holding and educating our current workforce. And then we have to really train for the future. We got to get those next generation loan officers here, and they got to be younger. We would love for them to start early in their 20s. That way they can really build that pipeline that it takes, and make the mistakes they have to make, and continue to grow and learn our craft the way it should be, because, experience really matters, because some of these loans are very, very tough.
Yeah.
So they're going to really have to be almost an apprentice and serve under people that really know how to get them done. But once they start mastering that, they can really, really serve the elements of our communities. But for a seasoned loan officer, I could say master the products that are out there in your community that make the needle move, whether it is through your local housing finance agency. We offer a suite of DPA programs. I think we have like three or four that are 100% financing ourselves in-house. Master learning how to stack and layer those community seconds in your community. That really helps. Understand all the goodies that Fannie and Freddie have. They have a lot of different things that, if you really just go in and refresh yourself on their offerings, they offer stuff that could be difference makers in your community. don't be afraid to use that USDA loan. It's 100%, you know. A lot of people don't know that sometimes people are purchasing in areas that are USDA certified and they could, get the 100% financing. And, don't be afraid to coach people into saving for that 3%, you know.
Yeah.
That's still not because we spend money. We really do. We like to take vacations like I do. And sometimes that money is there, but it sometimes just needs to be allocated in a different way. So those are some pointers that I would point out for people dealing with it. And then don't be afraid to get involved in technology and the things that are driving and market yourself. You really have to get out there and market yourself to these communities. Let them know you're out there and you're willing to do it. I would say spend 2 weekends out of the month home buying seminars in those local communities, and people will really lean forward and they will remember you. And not only that, the referral business in the Hispanic and African American community is strong. When I was a loan officer, my business majority came 80% referrals. They love to refer people that do good work. And once they point you in the right direction, everybody will just flock to you and you'll be that local guy.
Yeah. Now, as far as as far as what you mentioned, as far as you know, as it relates to kind of you getting into that community. Now, if I am a Caucasian,
Hmm.
and I'm looking at this and saying, yeah, I recognize the opportunity that exists here, and there's probably going to be a shift to where the percentage wise, it's going to be minority taking out
Hmm.
mortgages,
Hmm.
and I sometimes wonder if there's a reverse mentality for a Caucasian saying, I'm screwed.
Hmm.
You know, what would you say to, because on one side of the coin, you're right. Like we need to have an influx of not
Hmm.
only young blood, but
Hmm.
colored blood, right?
Hmm.
Um, colored skin, if you want to get technical, right? But that's what we need. Now,
Hmm.
the reality is, as you mentioned, the average age of a loan officer is
Hmm.
above 50, also very white.
Right.
And so is what would you say to somebody who might say to you, you know what? I'm not in my 20s, I'm mid upper 30s, I'm
Hmm.
Caucasian, and I'm intimidated to attack that
Hmm.
segment of
Yeah.
population. What would you say to somebody who says that?
That's a great question. And when we start talking about the browning of America, sometimes that does freak some people out, because change is not comfortable for everyone. And sometimes the things that we don't understand kind of freak us out a little bit. It happens to me, you know. I'm a go-getter, a hunter by nature, but sometimes I can be very risk averse to change as well to certain things. So when you feel this coming, when you hear stats come in and people say 70 plus percentage of net new homeowners is going to be people of color, how does that feel for the white male? How does he feel about that? I was sitting in a room a few years ago when one of our executive leaders were there and they started talking that language and he just sat there and when it was his turn to speak he cracked a joke and says, well, wow, I'm just a white guy in the room, and he just kind of laughed it off. But how does that feel to the white male, that is looking and says, is my business going to shrink? What does that mean? Do I have to reposition myself? Do I have to reskill myself for this? I would say some of my most talented and favorite colleagues serve a variety book of business. I'll take my, trajectory for an instance. When I was a loan officer, my book of business was so diverse, Jeff. I could do a loan for someone at a Black faith-based institution and then the next day, I could have that couple that owned $1 million plus home coming in and doing a refinance. And then that next day, I could have a guy out there that owned a 700,000 beach home on Emerald Isle, coming in there pulling out 300,000 cash out because he wanted to do something different. And that's the way I model my business, And I hope that, that could carry over to the whole scope of loan officers today, that I would say diversify your pipeline. Don't be afraid to, of course, you're going to serve those people that automatically just come to you and naturally are drawn to you, but don't be afraid to open it up. If you want to say, hey, this year I want to open up 15% of my book of business to maybe doing more loans for Hispanics and Black folks, you'll be surprised out there. Like I said, they're not monolithic groups, that some of those loans are going to be really sweet, and they're going to be pretty straightforward and not that hard. And then if you say 5% of that is going to be loans that I have to dig in deeper and maybe have a little hair on them. Let me start doing a few of those loans because I have to learn the nuances of some of those hairy loans. And then, from years and years down the road, I can begin to serve that client. So I'm actually working with Matt Shields. We had a great call the other day. He's out of Ohio. And he
Hmm.
says, John, I want to do 50 million. Of course, he's a what, 30, $35 million producer last year. He says, I want to do 50 million. And I want some of that portion of my business to come from community lending. And we had a great one-on-one huddle together and we strategized some ways that we could do it. We started getting some marketing together for him about all the programs. And come to find out, Ohio has tons of programs, DPA programs for nurses, physicians, firefighters, first-time home buyers, recent college grads, and they make up the whole spectrum, Jeff. You got black folks, brown folks, Asian folks in there. So you'll
Hmm.
be able to, spread your wet net a little wider. And that's probably one of my message today is just spread your net as wide as you can get it. Because, some portions of the lending are going to shrink, but it's still going to grow if you spread that net and, cast a wider net out there for a bigger pool of consumers.
Yeah. Yeah. I mean, it's a big reason why you're here, right? And
Hmm.
and
Hmm.
and what you just said right there probably is the best set of advice is do exactly what Matt did. That's why
Hmm.
John's here. And
Hmm.
and when you need to strategize and collaborate and just be advised
Hmm.
about different ideas to again add this bullet into your gun, right? And
Hmm.
and and
Hmm.
and again, as you said, diversify because we all should. Because at the end of the day, we're all
Hmm.
humans. We all bleed the same color,
Hmm.
and none of that should even matter.
Yeah.
And it's really just all about, as you mentioned, getting out there, getting into the community, dedicating a couple of weekends a month to
Hmm.
getting into those communities and doing first-time homebuyer seminars and educating the community. Because if you're not, somebody else will.
Yeah.
And I love that, John. What any parting thoughts that you'd like to share with the audience
Yeah, I
today?
would say my parting thoughts would probably be to the future leaders out there that are coming up behind us, that ones that may not find their way into the mortgage finance space. Maybe, you're going to choose a different path, whatever that is. I would like to give some parting thoughts with them. And it's probably three things that I would say to them. And number one is don't overplay the long game, instead, build based on shorter intervals. Because things are changing so rapidly, Jeff, in our environment. Um, Back in the day, you could, and I can probably count on two hands the number of colleagues that I know that have been with the same company for 18, 20, 25 plus years. My mother is an educator by trade. She was lucky enough to do that for her full career, retire with a great pension, benefits, and things like that. And then when she left, she was able to kind of double dip and start her own practice, things of that nature. But having that old school way of doing things going forward, I think that's changing because things are changing. Technology is changing the game. Things you learned 2 years ago almost are not relevant after 18 months. So every 6 months, it seems like something new is popping up. And I think technology is driving that and fast forwarding. I think after the pandemic, things just sped up in a way that, I don't think we really saw it. I was fortunate enough to do a technology program through MIT back in 2019, and it merged the digital space and the economic models together. And what we saw, in those focus groups together, working with cohort for people all over the world. I still have friends in France and UK and all over the world, South Africa that I still keep in contact with. We just saw that the models were just changing. And not only that, they were speeding up. And like I said, thinking ahead 10, 20 years, trying to say what's going to happen is almost impossible. So I would say to them, play in shorter intervals, those 3 to 5 year intervals, build off that, recalibrate, reassess, and then move forward because trying to, overplay the long game could be costly. But I would say, find the arbitrages, that you can find over a 3 to 5 year period, reset, and then move forward. And then I would say, if you do have a 9 to 5, don't be afraid to build an entrepreneurial venture on the side. It's going to probably take, multiple streams of income because everything's changing. You see it shaping right before our eyes. People that thought they had job security one day don't have it the next day, and
Yeah.
things of that nature. So, really, really focus on building multiple streams of income, be it real estate, that you and I are in, be it
Hmm.
an entrepreneurial venture, don't be afraid to build wealth outside of your traditional 9 to 5. And the last thing I would say is really, really become proficient in technology and everything that bubbles up. Be a student. Be a technology. Just consume it in. Just bring it in. Don't be afraid to learn new stuff because it's not going to go away.
Yeah.
It is going to be the platform that continues to evolve. You're a big believer and proponent of it. You've been championing it every day, every week.
Yeah.
We see you championing it. So be really proficient in the new technologies and be an amazing networker. I was at a very high-end rooftop lounge just this past weekend. I'm in Northern Virginia, and a young college grad has been, two years out of grad from VCU, just sat beside me at the bar, and he just gave me a fist bump, and he just began picking my brains and the energy that he was just pouring into that conversation. I was like, wow, this kid has a bright future. And he just really, he traded options. He did a lot of stuff. He was talking about real estate and things of that nature. And he was just networking to the point where I couldn't help but connect with this guy. I was just like, because he has a bright future. So be a super networker because relationships at the end of the day, Jeff, they're not going to go away.
Yeah.
The relationships we build to our communities, our constituents, build referral partners and things of that nature. So be a super networker. It'll go a long way. And just personally, some things I would like to do is I like to travel a little bit more. As we know, food is the great connector. So always eat well. Laughter is probably genuine laughter is probably one of the most stickiest things that you can have. So don't be afraid to let your hair down. And I think travel, of course, is one of the biggest educators that one could have. So really
Yeah.
live life and love it because life is so short. It could, as we saw what happened in DC with the plane crash and the Black
Yeah.
Hawk, it could just go away today. So really, really love your family really hard and just be that infectious person that people like to gravitate to. And you'll start to see a lot of things bubble up.
Where's the next place you're traveling to?
That is a good question. I'm a big fan of Europe. I went to Italy for my birthday last year. I went to
Cool.
UK. I spent Christmas in London, London is one of my favorite places.
Yeah.
But I think I need somewhere tropical this time. I need to get tropical vibes.
Is that like the Caribbean or what were you thinking?
Yeah, maybe the Caribbean. Yeah, I'm thinking maybe the Caribbean or maybe somewhere in the Mediterranean too. You just never know. So we'll have to see how that goes.
Cool. Cool. Awesome.
Yeah.
Well, John, it's been a pleasure, man. If what's the best way to connect with you?
Yeah, you can reach me. You can follow me on Instagram at j.drumgooleofficial. You can also reach me on Facebook at John Drumgoole Jr. Or you can just send me an email at johndrumgoole@usamortgage.com. And we can connect on all of those channels. And we can continue to build together, grow together. We're here. I'm here to support you. We have a great community lending team led by some fantastic folks. I don't want to get into calling names because I'll forget someone. But feel free to connect with all of us. We're here to serve you and we're here to make a difference, not just USA, but industry wide to build that community wealth and make sure that people who are deserving of that next step up really get it.
I love it, John. I appreciate your time, man. This has been more than I bargained for. So thank you for sharing. I hope
Yeah,
those that listen to this feel the same way because it's great. It's really great to get to know you and learn more about you.
yeah,
And dude, keep
absolutely.
doing keep doing amazing things, man. This is a word as a tenured person with this company. It's an honor and a privilege to have somebody like you with the company. So I'm really glad you're here.
Well, you're the man, Jeff, and we really appreciate all you do, buddy.
Thanks, brother.